Okay, good morning. It is the morning of June 9th, 2021. This is Ryan Sweeney here with your pre-market report. What do I really have for you today? Well, ain't really much going on if I'm being honest. But in terms of the technical action in the market, I think there is a lot to talk about and some interesting things to point out for you for the rest of your day if you're looking at this market and watching it. So we'll start with the dollar. I've been talking about the dollar going below 90 for a long time now, and that's what I need to happen for my portfolio to put on good gains, along with crude oil and financial sector, which the financial sector is under some pressure right now, and we'll get to why that is the case. But anyways, the dollar below 90, okay, only down slightly, but it is an important level, and if you watch since about 4 a.m. this morning, this level has been played with. We went below, we went back above, then we bounced off 90 again, then we bounced off 90 again, then we went below, then we bounced off the same level that had previously been support. So now, I mean, really, what I'm looking for is the 90 level to be set up as a solid resistance point, and it has bounced off and below a lot recently. So we need to see it hit 90 and stay below. And take another leg down. So this for me isn't really anything right now. I don't think it's anything for the market, although we are seeing silver 0.5% higher, gold 0.1%, pretty much nothing. So and moves like that for silver are pretty much nothing as well. So there's really nothing happening right now in terms of gold and silver, although they aren't lower. Okay. Crude oil, as I said, almost 0.5% higher as well. Okay, the trend is higher for crude oil. It's no surprise, especially with the dollar under a little pressure, that we get another bid in crude oil this morning. Although, again, 0.4% on crude is really nothing as well. So really a whole lot of nothing. Dow Jones is flat this morning. NASDAQ is 0.4% higher. The only one really putting on any real gains. S&P slightly, fractionally, 0.15% higher. Okay, 10-year yield is actually quite a bit lower this morning. So cash is making its way into the debt market. Now this is an interesting dynamic that I was thinking about this morning. I'm trying to come to some sort of conclusion on what it might mean, because honestly, it's surprising for me to see the 10-year yield dropping like it is dropping. It indicates some sort of fear reaction in the market, and it seems to be putting pressure on stocks, specifically financial stocks. The theory goes, and I don't necessarily subscribe to this, but this is what the market plays with. When interest rates are lower, it's harder for banks to earn income because they earn interest on income, right? So their profits are going to disappear if the interest rate is lower, and that's why you're seeing pressure on the financial sector. And that's why you're seeing the NASDAQ outperform here with crude oil and the dollar lower. Crude oil higher, dollar lower. And so why are the interest rates dropping right now, right? I mean, you have all the things that would make interest rates go up, principally being inflation, picking up, wage inflation, consumer price inflation. I mean, even by the official numbers, these are going up quite a bit. So my eyes are peeled for something here. My eyes are peeled for a possible dip in this market based off of this drop in the 10-year yield. It makes me think that somebody is anticipating something, getting ready to jump back in on certain assets. But at the same time, the Federal Reserve plays their games. Right now, literally, what could be happening, for all we know, is the Fed is adding digits to a screen and buying 10-year bonds from people who previously held them, and then those people are going out and spending those dollars, i.e. selling those dollars in exchange for something else. Hence why it's possible to see pressure on the 10-year yield down, which means it's being bought up, but also pressure on the dollar, which is lower this morning. Now, the end game scenario is one where interest rates spike because everybody realizes how bad the dollar really is in its current state, and then a solution will be offered, the 10-year yield will spike very heavily, and cash will flow out of the debt market and into other assets. But right now, we have this more traditional market setup, and so in today's environment, lower yields mean that you can actually earn less money if you buy a bond, and so people start to look for other assets that are returning higher. Sometimes that means gold and silver. Recently, and not historically necessarily, but recently, say last year or so, higher yields have not really been favorable to gold and silver. Lower yields kind of have been, and so this is just a dynamic to watch. It's a very, very interesting one. If this 10-year yield starts dropping more, I mean, we're still kind of in a reasonable range, although it's a pretty precipitous drop this morning. We're in a reasonable range. If it were to drop quite a bit more, then I would really take my blinders off. I don't know what the saying is, but I would be looking at that very closely, and I might be adjusting my positions, to be a little more neutral, maybe a little less risky, blah blah blah. And other than that, cryptocurrencies are catching a nice bid. I mean, I've told you exactly how cryptos are playing out. They bounce between 30 and 40,000. They're consolidating, and that's been my view for a couple weeks now. And I don't know how much longer this will continue, but I think we could have a couple more weeks of this, but sooner rather than later, cryptos are going to break to the upside. And again, I think that could happen when we get a solid break below 90 for the dollar. Economic news wise, there's one data point coming out that I'm seeing: wholesale inventories at 10 a.m. They're projecting a 0.8% increase. We'll see what happens to that, and maybe I'll talk about that in my post market. I think I'll have a lot to talk about in my post market today because it's just kind of a interesting day to watch play out. My eyes will be glued to the dollar yet again. And the 10-year yield, dollar 10-year yield, and they're always glued to oil too, just by nature. Okay, I'll let you go now, and I'll see you at the end of the day. Okay, have a good one. Like and subscribe. I always forget to do that.